Hi, Mark. Good afternoon from India, and thanks a lot for joining us today. When we opened today, there was a trading halt. There was a lower circuit of about 10%, and now we're witnessing the biggest intraday recovery for Indian equities. And you've also highlighted in the past that at current levels, valuations are looking good. You like Indian equities. Do you think the capitulation period is over and one can take a fresh look on Indian equities?
Of course, I think you always have to be looking. As you know, I'm quite bullish on India generally, so we're continuously looking at it. But we have to also realize that the volatility is going to continue. I mean, one day you'll see it going up dramatically, the next day going down dramatically. So what you have to do is pick your limits based on the valuations and then stick with them. And, you know, if it gets hit, fine. If it doesn't, let the market move. But we have to expect a lot of volatility going forward.
In fact, that's been the theme, Mark, at least in the last 2 weeks. Volatility, not just in India, but globally, has been spiking. How should one figure out what to buy at these levels? What pockets then? Do you go for, stocks which were richly valued, but the valuations may have come off from the peak valuations we've seen in the recent past? Or do you go for dividend-yielding stocks?
Well, as you know, I have a bias towards dividend-yielding stocks. But not only that, companies with good balance sheets. You must remember, we're entering a period now where there'll be lots of strife. Lots of suppliers will not be able to pay their bills, and some companies will get into financial strife. So you have to get companies with strong balance sheets, companies that are able to pay dividends, because that will enable you to stay in for a long term, and also companies that have really solid managements that can handle the crisis that we're facing.
Mark, officially we've corrected 20% from the top, and now with today's gain, of course, we'll be somewhere about 18-19% correction from the top. Do you think volatility continues to remain high even at these levels, but still someone can go ahead and take a bet? If that's the call, we've seen the maximum volatility in a couple of these good quality banking stocks as well. Would you take a look at these banking stocks, good companies which are trading at 52-week low levels?
Yes, I would take a look at those, particularly now that the government is bailing out Yes Bank. So it might look better. But frankly, our preference would be for industrial stocks that are working on products that serve the infrastructure, and consumer-oriented stocks. Those are the ones that I think are going to be more interesting going forward. But as I said, expect the volatility, set your limits, look at the valuations. Once you have a valuation which is attractive, then set your limits at that point and just wait for the market to come to you.
Mr. Mobius, good afternoon. A lot of these high-quality banking names are, by virtue of the fall that they've seen now, trading sub the 10-year averages on the price to book. These were not bought over the last 1 year because they were always expensive. They have now become moderate. Is that a part of something that you would look at or consider?
Yes, we consider it, but please remember that the number of bad loans will be increasing. Of course, the government is giving the banks more leeway in the way of assessing or categorizing those loans. But as shareholders, you can have a real problem going forward because the bank could be sitting on a lot of bad loans. So you have to evaluate these banks on an individual basis to see what is the nature of their book. A price to book, of course, you've got to look at, but that book may be somewhat faulty.
Okay. One last question from mine, Mr. Mobius. This is certainly not the end of it. We've seen a bounce today in India and maybe some of the other markets in today's session. Do you reckon that we formed a near-term bottom, or would you reckon that it's still going to be too choppy and volatile?
I think it's going to still be very choppy and volatile. I think at some points we have already reached the bottom. You know, we've come down dramatically and then bounced up and down. So it's a bottom forming situation that we're now seeing.
Just one last question with regard to the flows that we've been seeing. Of course, there has been an outflow in the last 2 weeks. FIs have sold nearly 5 billion worth of Indian equities. How do you see the fund flows panning out, especially at a time when globally equities are witnessing a sell-off?
Well, I think these probably the biggest flows have already taken place. Going forward, you're probably going to see flows coming back again once the market begins to stabilize, particularly in the U.S. So probably the biggest outflows have already taken place, and now we're probably going to be on a sort of a bottom feeding sort of process with some flows coming in, small amounts coming in until the market picks up.
Okay, Mr. Mobius, we leave it on that note. Appreciate you joining us today and taking us through your thoughts on what's happening with the global equities and especially India. And have a good weekend. Hopefully everyone has a good weekend after a tumultuous week that we've seen for the global market.